Hello, everybody. I'm here today to talk about financial statements. And there are three major financial statements. Those are the income statement, the balance sheet, and the statement of cash flows. And I'm going to be making three videos, one for each type of financial statement. And financial statements are really important to understand, where the money is coming from, where it is going to, how, you're managing all the financial side of a business or a project. So, beginning with the income statement, the income statement will tell you how much money is coming in and how that money is being spent. So, income statement. Sorry for the terrible handwriting right there. So the income statement is basically broken down in the following way. So you start with the revenue, which is basically how much money is coming in, sales, so dollar signs. Then you subtract from that the cost of goods sold. So basically how much money it costs to buy or to produce these products right here. These products right here. So basically, when I get how much money I got it, and I subtract how much money I spent to buy or produce those products, I get my gross margin. So basically, how much I made a margin in from sales minus the cost of goods sold. But unfortunately for a business, not all the money goes to just to buy products. You have to pay for, your managers. Your managers are not making your product. They're basically trying to manage the people and the processes. And you need salespeople, and you need all kinds of what we call overhead. So that's basically what they call operating expenses. So operating expenses covers everything that doesn't exactly touch the product. So here the COGS is going to be basically, the material needed for the product, the labor to create that product, and then in the operating expenses is basically the salary of your executive team and the all those things that really don't touch the product, the salespeople and all that stuff. So now you come to the second margin. It's called the operating margin, or also called operating profit. So now we're getting closer to exactly how much money we made. So that's here, you subtract that gross margin minus operating expenses and you get to your operating profit. So now the last thing that you need to subtract to get to the bottom line of how much money you made is the interest expenses, which is basically, if you have loans on your business, you have to pay interest on that. So that's the last thing that you're going to subtract right here. And also taxes. We all need to pay taxes. So that comes also down here. So after you subtract the interest expenses and the taxes, you're going to get to your net income. Net income is basically how much money you can put it in your pocket. After paying all the material to make the product, all the people, all the overhead, interest, taxes, and all that. Remember, the net income could also be a net loss if you didn't make money. A lot of companies suffer a loss. For example, Amazon. Amazon didn't have profits until not that long ago, and they're still in business because they kept getting funded and all that. But that's basically it for an income statement. And then now we can go to an example right here. This is Apple's income statement So this is a pretty good example. Here you can see net sales. So they made $8 million. So they basically made $42 billion in this quarter, this past quarter, which is pretty crazy. $42 billion. This is cost of sales. This was basically 26 million. So a little bit more than half. And then here's their gross margin. Their research and development basically is how much they spend on things before they're getting into production. So on future projects, things that may or may not turn into a product. So basically things that they're cooking up in the lab. Sales, general, and administrative. This is normally referred to as SG&A. So basically all what we call the overhead before, and then the total operating expenses to get to the operating income right here. Then basically going into all the tax provisions and all the details of what they have to pay as a corporation, and then you finally get to the bottom line. They made $7.7 billion at the end of the day. That's what they could put in their pocket. And that's only for one quarter. Right here we have it for the whole year. So the past year they made $36 billion that they basically can spend on whatever they want. Now, I think that would be it for income statements. This is a little bit more complex, and we're going to cover that in a next video. But it's basically how the shares are broken down,